We're going to talk about something that's, that we talk about pretty often, actually, and had this discussion not that long ago. But as it turns out, it coincides with something that we've got going on here that we're going to be releasing real soon, and I'll be talking about that today. But so we wanted to go over it again to make sure everybody understands the power of this very simple setup. Now, things are only simple if you understand what's going on. You can certainly make some very simple things difficult, complex, and hard to understand, and then take some very complex things and make them very simple. And this is what we've tried to do. But you still need to know and understand what it is that you're looking at and why it works, which will ultimately make it a lot easier for you to have confidence in it when you're trading it. Okay, so we're gonna go over this order flow and divergence simple setup. Most of you know me. I've been around for a long time. Started out as a remodeling contractor. I struggled for a long time at trading, mostly because I was trying to learn trading from going out there into the internet world to find the answers that I thought were out there. And as it turns out, I got an awful lot of bad advice, a lot of misdirection. Pretty much anybody can put anything on the internet, and certainly everything I read, I fell for it because I thought that, well, everybody's smarter than me as it relates to trading. So I need to pay attention to what they're saying, regardless of who they are. If they said they were successful, then I believed them. Little did I know that most of them really have no idea what they're talking about. So I struggled and never made any traction. Then some really cool things happened to me. I was able to turn things around and to become a full-time trader, and an educator and a system developer. So most of the system development and indicator development came about simply to take the concepts that I realized were very valuable and important, and take some of the very complex analysis and boil it down to something very simple, and then make it simple to read and make it simple to trade. All right, so just some quick comments here. Number one, I'm in the South here in the Atlanta area, and I don't know if you've been watching the news, but we got absolutely hammered with snow, and it's real fat, heavy. What was it? Can you hear me now? What was the last thing? Oh, heavy snow. Okay, good. I'm glad. I just happened to look down and notice the light was off on the microphone. Fat, heavy snow. Yeah. So I live in a really heavily wooded area, and the snow is now falling off the trees, and the trees are falling, and the branches are falling. So hopefully we won't lose power here if something falls across a power line. But it's real pretty here, but it's treacherous if you're standing outside because it's all falling out of the trees now. So just so you know, if suddenly I'm gone, it'll be because of a power outage, something like that. I'm going to guess we got 8 to 10 inches. I mean, it was really heavy, wet snow, not real light, fluffy, dry stuff. So yeah, it's pretty uncommon, particularly in December. Usually it's going to be first couple of months of the year where we're going to have the most snow, but So this was uncommon for us. But anyway, so I'm just kind of giving you a heads up. Yeah, yeah. So yeah, you really can't appreciate how much snow we have here, can you, Rich? Why does anybody live in Buffalo? Holy cow! I was just there not that long ago, in October actually. Um, Okay, so that's the one thing. If we lose you, that's it, and I apologize, but that'll be an issue with the power. Hopefully, that won't happen. Number two, I don't read the chat as soon as I get started. I'm going to cover up the chat. If you have questions, Connor and Lisa are here to help answer your questions for you in the chat. If you have questions for me, just hold them until the end, and I'll move or I'll start reading the chat. I cover the chat so I don't get distracted and I can keep going. If I need to stop, Connor or Lisa can stop me. In the background, we have a little chat thing that we do. And so they'll hit me up on the chat and tell me that I need to stop or back up or whatever. Yeah, if she's awake. So it's hard to keep her awake. But Okay. Well, I'm glad at least I warned you, huh? That's exactly what happened. The power just blipped off and came right back on. And it wasn't just the power because I do have a UPC. It's the internet also. Sorry about that. At least I got you some. I gave you a heads up that it could happen, and hopefully it won't happen again. But I can't promise anything. But we're going to do our best. Everybody can hear me, okay? Just double check my sound. All right. Now let's see if we can project my screen and we can get started again. I think my computer is still in the process of trying to boot up, and I'm trying to do too much at once here. All right, back in business. Apologize. We're doing the best we can with these big snow bombers falling out of the trees. All right, so I'm going to be covering up the chat, like I said. Now, a lot of this event is largely about measuring order flow. Um, and to do that, what we're going to do is be looking at what the smart money is doing, right? So the smart money happens to be the ones that are generally moving the markets. And so if we can see what they're doing, if we can understand what they're doing, then we get a better idea of what's going on with the order flow. And when I say order, I mean processed orders. I don't mean placed orders that are the level 2 stuff where you just sit and watch the orders being placed and then taken off without actually being traded or processed. So we're gonna call the smart money, the market manipulators are the people that are basically the insiders. They're the ones that you might be heard think of as the high frequency traders or the market makers, the institutionals. Those are the people with the money, and with money you have power, right? And so the power that they wield is something that us retail traders can't even come close to touching, okay? Nor should we try to compete with that power. They have the ability, because of the supercomputers that they can afford, the placement of these supercomputers inside the exchanges, um, the money that it takes to develop these algorithms, these quants that can pull off these trades is well beyond what most of us can do. So that gives these guys an advantage, and they're able to manipulate the markets because of that advantage. Okay. Now, there are a lot of people that don't really think about this too much because they're still in the middle, or they're still believing everything that they've been reading on the internet for all these years, and the old way of doing things just keeps getting regurgitated, and people still believe that you want to buy in and you want to just ride it out from buy low and sell high and just ride it out over time. and that's going to be a better way to trade. But nowadays, if you just look at any charts, you can see when the manipulations are taking place, and they're not necessarily following the old rules of trading. You know, using uh, technical analysis or even historical analysis. So if you try to jump in with the smart money, you're going to basically just jumping in front of a freight train, because you can't stop them. You can't try to follow them. You're going to get smashed no matter what. Either way you go. Anybody who's ever tried to trade with the smart money, in very short order, you notice that things don't generally work out too well. So the best thing to do is try to figure out how to trade after the smart money. Okay? And this is what we talked about the other day when we talked about reactive trading. So why do you think these guys, the smart money, manipulates the markets the way they do? Think it's just for fun, or they're taking people's stops, or what? Why do you figure they do what they do? Well, they do it for one very simple reason. Every time they do it, it creates a typical reaction from us typical retail traders, or set of reactions. Okay? So what happens is when you have the market manipulations going on, we have people that will suddenly start taking profits. We have people that will suddenly start panicking. You don't know whether you should stay in, whether you should get out. You start having all this guilt that, oh, I should have taken money when I knew I had a profit, and now I'm losing money. Do I wait? Do I cut my losses? Do I follow my rules and stay in this until it goes even further against me? What do I do? So, it raises a lot of stress and emotions in us retail traders. And this is exactly why they do these market manipulations. Okay? So we can see these market manipulations. If you look at any chart, you're going to see some sort of pattern like this. And I don't care what chart, I don't care what time frame, you will see this pattern repeated over and over and over again. Okay? So one of the things that I noticed when I look at a chart is that, for the longest time I looked at charts and I never really thought about what was actually happening to create that chart pattern. Okay, I was just listening to what I was told, trying to follow trends, trying to trade breakouts, trying to trade Fibonacci's, trying to, just doing everything that I read about, rather than thinking on my own. When I said something really big happened to me when I started turning my trading around, well, that really big thing was I decided to think on my own rather than to look externally for the answer to trading. I decided to do what I was best at. I was a contractor, right? And as a contractor, one of my major skills was problem solving. So I decided one day I'm going to look at this trading thing. I'm going to forget everything I learned, and I'm going to look at trading charts, and I'm going to try to figure out what's going on. And if I can do that, then maybe I'll be able to find a way to exploit an edge. Instead of listening to everybody else, why don't I try to figure this out? So I looked at a chart. You just look at a chart, and I said, okay, well, something specific happens because I have these really long bars, these upthrust bars that generally something happens right after them. So what's going on inside of these bars? So that became my mission, to find out, well, if something's going on and then price stops and pulls back a little bit, it seems very predictable that happens. So I started studying those bars and what's going on inside those bars so I could anticipate that pullback, and sometimes it was a full-on reversal, right? So I started looking at these and I started realizing there's something going on here in these upthrust bars that gives me a heads up, that gives me reason to believe that something else is likely to happen. Well, that was the beginning of this whole measuring uh, order flow inside each bar so that I could understand what was going on. And so I started by measuring volume. And volume wasn't giving me the information that I was hoping for, because I was thinking, well, those bars are going to be really high volume. And so if I can just pick up when high volume is coming in, then I can anticipate when we're going to get a pullback. So I applied volume to it, and I was not getting that. In fact, I was getting quite the opposite. And I thought, well, why is it that these upthrust bars are relatively lower volume than some of the other smaller, just sideways channeling bars? So I started looking at that and I thought, well, that doesn't seem right. So I pulled up a time and sales, and I started noticing, wait a minute, price is really moving. I'm sorry, the ticks that are there, the orders that are there are being processed very, very quickly. And you can see that by watching time and sales. So then I started noticing, the speed at which the orders are being processed is more important than the number of orders being processed. That seems to be the heads up that the big boys, the market manipulators, are doing their thing. I met a guy that was a floor trader at the time, probably 5 years ago, and I told him my premise and what I had done with the speed ticks, and asked him, is this really what's going on? He said, that's exactly what's going on. So he did verify for me what I thought that I had maybe figured out, and that is when the market makers are doing what they're doing. Now, how do I know it's the market makers? Because the orders are being processed at a rate that would require one of those big supercomputers. It is highly unlikely that us little retail guys could do that. So that's the heads up. If they're doing it, why are they doing it? Okay, the smart money just sets us up every time. And they know that we're going to act the same way every time because, unfortunately, we're humans. Oh, wow. A huge tree just fell in my backyard. That was amazing. The snow has so heavy and so thick on these trees that it's just taking them down. In the Atlanta area, North Atlanta. That was freaky. I thought it was going to fall on the house. Okay, so let's talk about this. These manipulations. Now, when these happen, some of us are going to win, right? These manipulations just happen to go in our favor. If we just happen to be in a trade and it goes in our favor, then we're excited, right? Most of us aren't going to, though. We're gonna maybe cash out on profits, but most of us are probably going to be getting stopped out, or it's going to get outside of our range of our trading system. So we're typically going to get trapped by these guys, by the big money, and they know we're going to react. We're going to react emotionally, whether it's from greed or fear or panic or stress or whatever. But we're going to react to these manipulations, and this is exactly why they do it, and they do it over and over and over again. All right. So sounds like they have an unfair advantage, right? Maybe we should find some other way to make money because maybe we just can't win. You know how many people have come to me and said, you know what, that it's just, I just don't trade anymore because the the market makers, the HFTs, that was a big thing that people talk about, the high frequency traders. They have such an advantage over us retail traders, it's just not fair. Well, to be honest, if the market makers, the HFTs, the quants, the smart money stopped doing it, if they were no longer allowed to do it by the exchanges, I'd probably have to quit trading, because it is such an easy way, an efficient way for us to see and understand what's likely to happen next. So all we've got to do is measure the flow of the orders coming in, not the quantity, but the rate, okay, of the orders coming in and how fast they're coming in. So we're always looking at the rates of flow. And flow, the higher the rate, the more imminent the exhaustion. Exhaustion always follows a high rate of flow. Always. Look at any chart at any time frame. You get a high rate of flow, you can see exhaustion setting in every single time. The harder the flow, the more imminent the exhaustion. The big flow, the hard pushes in the markets are almost always generated by the market makers, because us retail guys don't have the ability to do that. You know, you sit and you watch a trading chart and you think, gosh, look at all these people trading. Look how fast people are pushing price up. Generally speaking, it's not going to be people that are pushing price that fast. Generally speaking, it's going to be a market maker, and then people jump in and they help, but they don't precipitate the move, okay? So the better we get at measuring the flow, the better we are at anticipating the exhaustion, right? So if we know that there's a really strong flow, and that's happening right now, we know with a high degree of confidence what's likely to be happening next, and that's what gives us our edge, okay? So how do we do that? Well, back in the day, it used to be, reading the ticker tape, right? A lot of people will call it tape reading or traded volume analysis. That's actually the one I prefer, but most people don't really understand, so we just call it flow or order flow. Price action. It's actually just where are the big boys spending their money? All right, now you really can't do it so much with a ticker tape, but we do have some tools now for reading the flow of orders. But if you're looking at a time and sales, you'll notice that it gets very difficult to translate that information into knowing when to place a trade, okay? It's very interesting information, but I've spent a lot of time looking at time and sales, and within about 3 minutes, you kind of get hypnotized and you forget what you're doing, and it's very hard to pick up the information that you need to help you make a trade decision, okay? So let's go back to this. We've got some areas of accumulation and distribution going on here where really nothing is going on for us. For us, this is it seems to be very low areas of interest where nothing's going on. So this isn't really where we want to be trading. We want to try to avoid trading in these channeling areas. Really nothing. There's no good trading system for that. Now it seems like there's nothing going on, but truth be told, the big boys are actually doing a lot of buying and selling during that period of time. They just do it very quietly. They do it very slowly. They do it not to tip their hand, so that they're able to manipulate the markets and catch people off guard. If everybody knew when they were doing their buying and selling, then they wouldn't have an advantage, right? So they try to hide this. There are certain ways and strategies they have for hiding this, but there are also certain rules that they have to follow in order to be in compliance with the exchanges and to be given this advantage. Okay? So they still have to follow some rules. And because of those rules, we're able to figure out where they're, when they are being the most active. Okay? So we see these low volume channeling things, and nobody wants to trade during this. Then we see these very low volume, very low speed type of trades. Speed meaning the rate at which the orders are being processed. This is not a good time to be trading. Okay, and we all know that. We're all, if we're good traders, we all very patiently wait for things to change. If you're trying to trade inside this period of time where there's very low volume and very low speed of orders being processed, you're probably, if you're trading during that, you're probably not trading very successfully because price is just kind of drifting around and there's really no real edge there. But totally different when you see low volume but a high rate of speed of orders being processed. Low volume. This is one of the ways that the market makers try to fool us. Many people watch volume to try to help them make a trade decision. Market makers know this. They want to keep in order to move price, they don't want to do it on high volume. They want to do it on very low volume, but they want to do it very quickly. Okay? When we see on relatively low volume, but on a relatively high speed of orders being processed, that's when we have a good handle on when the market manipulators are doing their thing. And if we know when they're doing their thing, we know why they're doing it, and we know what's likely to happen next, and there's our edge. Okay? So we developed this the speed tick indicator, and so I was looking at the time in sales and thinking, well, I can see that things are changing quickly, that orders are being processed very quickly. But how do I use that on a scale? How do I say, well, if they hit, if they look like they're going about this fast, then that's probably outside of what retail traders can do. So I took that and so I asked a program, I said, look, if the rate of orders being processed is a certain rate, let's take that rate and let's extrapolate that up over some time. Somewhat like what you would say the rate of you're traveling in a car, you may be going 60 miles per hour. Okay? So I took the rate of the orders coming through and created this histogram that is kind of like a speedometer. Okay? He sent that back to me, and I noticed that whenever there was a high rate that exceeded a certain speed, okay, that we'd get a point where price would stop and turn. This gave me a heads up that the big boys were doing their thing. We have the orders coming in relatively fast. Volume may or may not be high. So reading the volume has absolutely no value in this. All we need to do is read the rate of orders coming in, and if they exceed a certain rate, then we know it's very unlikely that it's retail traders, which means it must be the other guys, the big boys. Okay? So we're looking for this increased rate because it's being manipulated, and we know what's likely to happen next. And so we put this speed. This is what we call our speed tick right here. This is going to be important because this is step one of the process of using order flow and divergence. It's also step one of our new indicator that I'm going to talk about here in just a minute. So we know that price has been manipulated. We know that the sellers are likely taking profits, buyers are getting stopped out. Demand will begin to overwhelm supply, and price will turn because of the new demand. And they do it over and over and over again. So now we know that we have this flow which leads to imminent exhaustion, this increased flow, this speed. And we know that when it reaches a certain point, exhaustion is going to set in. Now, let's look at this and let's take that imminent exhaustion and now let's add shift in momentum. Okay? We're reading order flow, not momentum. Let me put that in a different way. We're reading order flow and momentum. When they are in agreement with each other, then we know that things are operating relatively normal. Okay? When they are not in agreement with each other, then we know something's likely to happen. Okay? So we look at this momentum shift. And what I mean by momentum shift, let's say these tires, the tires are price, right? Going forward, up, 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 up. Yet they're spinning, yet they couldn't quite make the turn. They're kicking up dust and it starts to shift downhill. It just can't quite get up the hill without spinning out. Okay? So this is what I'm thinking of when I say momentum shift, and that typically equals something special that's going to happen. Okay? And this is our new rock star indicator. I'm going to tell you what that does here in just a minute. We have a trade setup called a Rockstar. It's actually not called a Rockstar. It developed the nickname Rockstar, and we're just kind of going with it. Okay. So I'm going to show you an indicator here, but first let's understand more about this momentum shift. Okay. This momentum shift. Well, how do we measure that? There has long been a technical analysis process out there called divergence, and that's measuring divergence, and it's actually quite simple. However, historically, it's been very difficult to measure or understand on the fly while you're trading. So here's a common divergence illustration. If we've got price up here, and price is setting a lower high, and then we've got a momentum oscillator here, and it's setting a higher high, we have a divergent condition. Okay? They are divergent, meaning they are not running together. So the definition from Investopedia is when the price of an asset and an indicator will move in opposite directions. Okay. Now this is very important, and it's also very powerful. So again, that's what it would look like on a chart. Now down here we use a momentum oscillator. There's any number of momentum oscillators you can use. We like to use RSI or CCI or whatever. I'm going to show you that in just a minute. But basically, price must diverge away from something, and in our case we use momentum. So we use a momentum oscillator like the RSI. And you can see on the left side we have increasing buying momentum and decreasing selling momentum. And then conversely on the other side, as it starts to drop, decreasing buying momentum and increasing selling momentum. Okay, so these are all very important, and we measure momentum with the oscillator. Now, it's very easy to see when I put lines and arrows on a chart on price and on the indicator to see when divergence is occurring. Not so much when you're actually trading. Okay, this is where it gets more difficult. Here's a better illustration of what's happening. This is a very oversimplified little graph, but it tends to illustrate things pretty well on what's going on. Say we just have price, and this is the slope of price. And down here we have a momentum oscillator. Okay, and they're in complete agreement with each other, which is typically how price and momentum move. They move together. Okay, you nowhere along the slopes of each will they diverge from each other. Now, when they get out of sync with each other, to your eye may go, okay, well, that's a slope there, that's a slope there, everything looks fine. They're in sync, basically. Truth be told, they're not, and that's where it gets complicated for us to see those types of things as traders, unless you've trained yourself to do it. The magnitude of the change of the lines have changed, such that one has begun to move the opposite direction before the other one does, and generally that's momentum. Okay, momentum always moves before price, and when they get out of sync, price will try to catch up with momentum. Notice right here that price is still falling, but momentum has changed directions, and if you wait just a little bit, price usually catches up with momentum, and then they get back in agreement again. Okay, this is very, very important. So let's look at this. Now, you'll notice I said this is kind of hard to catch with the naked eye, and this is just a chart I took just to, any old chart, any old momentum oscillator, and you can look at this and you can say, okay, well, this and this correspond pretty well. We've got this drop here, this kind of humps over, this humps over, goes up, it goes up, it drops. Okay, these are no divergence here. These are pretty much in agreement. And that's been how we've had to read divergence all this time. So you see the lower lows on both, okay, they're in agreement. Lower highs on both, they're in agreement. Here's one we're setting a lower low and a higher low, not in agreement. Momentum is actually moving up while price is moving down, and look what happens. Boom. So we think we can do it by just looking at it. Unfortunately, most of us will miss it. This is the most important thing that you should ever know about trading momentum and divergence. When momentum turns before price, price will typically follow. Now, imagine that when you have exhaustion that has also set in. Now it becomes really powerful. If divergence is so powerful, though, why isn't it more widely used? Like I said, it's hard to see. And you can even go get download an indicator for divergence. Chances are it's going to draw a bunch of lines, right? It's going to draw, and then it draws them backwards, and it usually draws them after the fact. Here's a bunch of different momentum oscillators that you could try to use your eyes to determine where there's a divergent condition. Okay? For us, we just use a simple indicator. This is our flash indicator. We've actually taken that the next step, and we've created our Super D indicator, which actually includes 7 different momentum oscillators. And we will print on the chart how many different momentum oscillators, which ones are in agreement, suggesting that we have a divergent condition. So we're looking at a confluence of momentum oscillators suggesting divergence. Very, extremely powerful. So here's what we're looking at to trade. Remember, we're looking for flow and then exhaustion and divergence. Okay? This is what gives us our edge. This is exactly what it looks like, and we see this all the time in the trade room. We have many, many videos on YouTube, our daily trade room videos, and our trade of the day videos. What we're looking at here is increased momentum. That's these dark bars. This is another indicator that we use to help us understand when potential exhaustion is setting in. If we have a lot of momentum going from dark black bars to white bars, that's saying we have a lot of momentum. We know momentum cannot be sustained, right? It cannot be sustained. It's going to get exhausted. So that's a heads up that exhaustion is imminent. This overbought condition, this pink outline, this is our OBOS indicator. This tells us we have an overbought condition. Another measurement of exhaustion. Okay? Now we have some other indicators that we'll talk about another time. And then on the open of this bar, we have divergence, two different divergence indicators. That divergence is telling us that momentum has shifted and is now heading the other way. I had, before everything crashed, I had a little video here up. See if I can pull that up again. Kind of another illustration for you on what happens when exhaustion sets in and momentum shifts direction. This is a real world. Now, I've superimposed a trading chart on this neat little video here. I'm going to move my microphone over to the speaker because I love the sound on this thing. All right, pay attention to momentum and then the shift in momentum. I actually think about that every time I watch a trade setup, because that's exactly what we're looking at. Price only has so much power behind it before it's going to pull back. People are going to be taking profits. People are going to be getting stopped out after a certain size move. So as soon as that happens, this bar opens with a divergent condition, so we know everything's getting really weak. This bar opens saying, hey, not only is this really weak, but momentum's already going the other way. You better jump on board because we're about to head that way. Right? Price is going to try to catch up with the momentum that has already changed directions. We get these indicators on the open of this bar. Now we add some of our other indicators, give us a perfect trade setup. This is our rock star. So I'm now going to introduce the rock star indicator. This is kind of a pre-release introduction. We'll probably have it out and available next week. We've got a couple little tuning things that we've got to do on it. But this is our Rockstar setup. This basically combines all of those things that we've talked about today into one simple signal on the open of this bar right here. So we've combined a lot of that information. Now, inside that indicator, we give the trader the ability to turn on and off the momentum oscillators they want to use to generate this signal. So for example, we have all of these different momentum oscillators, including these, that you can use to generate a divergent signal. And let's say you want to use only 3 of them. If you don't choose any of these, then you don't get a signal. Or maybe you want to make sure all of these are generating a signal, are positive. I'm sorry, are positive. Then you could say if this one and this one and this one are positive, then generate a signal. So that means all we have to do is change this any right here to an all. We hit the drop down and it'll say all. Okay? So we can choose, we can pick and choose. We can also say if any of these are enabled, print a signal unless some of these are enabled. Okay? We can also do that with the speed tick. Okay? We can say which threshold. We have different levels, threshold levels of the speed tick, whether we want to use overbought or oversold to generate a signal. This is an extremely powerful indicator that has our speed tick inside of it, our super divergence indicator inside of it, and our obos indicator inside of it. Okay? You can sum up with your own combination. Of course, we'll have our own combination that we use in the trade room, but you can create your own combination of indicators to generate or to disable the signal. So we do the same thing. We've been trading the same way for many years. We're just always looking for easier and more efficient ways of trading, and that's why we said this is an easy trade setup. We're constantly looking for easier and more efficient ways to display very complex and complicated technical analysis so that anybody can trade it. Okay? Now, if you want to see us actually trading this, it's all over. We have so many videos on YouTube. Go to our Trade of the Day videos on YouTube, and you can see this being traded every day. We have so many videos up on YouTube, not just our Trade of the Day videos, but teaching videos that show you how we actually take these trades. So looking for these trade setups is really not difficult at all. You know, we don't have to look. They just kind of show up. For example, this exactly what I told you about. We have momentum, we have an oversold condition, we have a manipulation, and we have divergence. Boom. Okay, this is a different setup that we didn't talk about today, but it took off. Again, strong momentum, market manipulation, exhaustion, divergence, open of this bar, boom. Now we use these major lines of support and resistance to help us qualify some of these trade setups. So now we turn it into something even easier to read, and that's, you know, taking some of these other indicators off and just use the star to tell us when we have a confluence of the conditions needed to generate a trade signal. This also has a sound, if you want to use sound alerts. We have sound alerts in the indicator itself. All right, so I know a lot of you came because you wanted to hear something that was very simple, but you may also not believe that it's no good if it's not complicated. We've taken a lot of the very complicated things that you've seen in trading and simplified them using our heads-up display indicators and trying to combine a lot of very technical analysis while removing a lot of things that you don't need to factor in making a trade decision. See, that was also very important. Leaving a lot of information out there unfortunately creates a lot of shades of gray for us traders. And when we have shades of gray, we have confusion. Right? So we try to move as many of those shades of gray out to delete them as possible. So you have a lot of yes or no type questions and answers to qualify trades. Okay. So all we need is confluence, a simple set of rules, a confluence of events, meaning lots of different things suggesting the same thing at the same time. Okay. And lots of practice. Right. So we have a program to help you actually learn how to practice your trading. Practicing during trading hours, during market hours, is exceptionally inefficient. I tried that for many, many years, and you can only get so many trades a day. So how much practice are you actually getting? Instead of 2, 3, 4, practices a day, it should be 20, 30, 40 different settings a day. All right, let's see here. All right, Lisa asked me to read Phil's question. I had to move the thing out of the way. Hypothetical performance statistics of Rockstar. Percent profit for using which settings, Phil? It depends on the settings are designed for your particular risk tolerance levels. So you could be more risk tolerant and edit those settings. There's any number of combinations of settings for that indicator to generate signals. There's not one set. I can't give you a hypothetical performance statistic of an indicator that has hundreds of different potential settings. Now, what I can tell you, and I've asked the traders in the trade room to help me out with this, and that is, what are they getting from our typical trade setups? Which, the Rockstar, we don't back test indicators or strategies, because back testing doesn't work. Yeah, well, I just threw it out there. Hundreds that we might want to use. Okay. Hundreds, certainly more than hundreds that can be used, but hundreds that we might want to use to generate a good signal. So I have a hard time answering that. I do know that what's reported back to me, Phil, from our traders that trade a somewhat conservative flash speed Mac trade setup, which is what we call our which is the technical term or the official version of our Rockstar. Roughly between 70 to 85% percent profitable trades. But there's a lot more to learn about that than just assuming that the indicator is going to do it for you. That's why I can't give you a percentage for the indicator, because the indicator doesn't do anything except tell you when a confluence of conditions exist in the market. It's up to you to place those trades based on your risk tolerance levels. Okay? So our indicators give you better information than almost any other indicators in the in trading. I promise you that. Gives you excellent information. What you do with that tool, with that information, I have no idea. I can't answer that. I don't know what you're going to do with it. that make sense? We're going to give you guys a free week in the trade room. Just give us a shout at that email address right there, and we'll get you hooked up. Okay, if you miss it, it's bunt@theintentionaltrader.com, and we'll get you hooked up with a free trial in our trade room if you want to come see this actually happen, just exactly the way we've talked about here in this event. All right, before I answer any more questions, let's go over the specials here real quick, and then I'll take as many questions as you want. We've got our VIP package now. We're introducing the Rockstar indicator. It is not officially released yet. We're only introducing it to you today. All of our VIPs that are currently VIPs will be getting that indicator for free. VIPs always get anything that we develop in the future that we use in the trade room for free. Okay, so we will be sending this out to our VIPs probably next week. We're going to let them use them for a couple of weeks, and then we'll be releasing it to the rest of the world. So a couple of weeks. All right. If you're interested, and then of course the price of VIP is going to go up after we add this new really nice indicator to the VIP package. Of course, the price of the VIP package is going to go up because we've just made it more valuable. But so if you're on the fence, if you have one of our other packages, if you want to upgrade to VIP, let us know. Now's the time. Okay. If you're thinking of getting on board, now's the time, because this is the cheapest VIP is ever going to be ever again until we add the Rockstar to the package and it goes up. Okay. So what do you get for VIP? You get all the indicators we talked about today, and more, including the Rockstar. You get unlimited access to our trade room. You get all, like I said, all future indicators and anything that we develop and use in the trade room, you get it for free. We have a weekly training mentoring session. We have that fast forward training program that I was talking about, where you could actually do 20, 30, 40 practice trades a day. You do that in our fast forward training program. We teach you how. You can actually trade right along with our trade room, but do many days at a time. Okay, and we teach you how to do that using the market replay utility, or what they now call playback, which I don't know why they changed the name of it. So all of this comes with our VIP program. Okay, so ultimately it's the best way to go. You're all in. There's nothing else to buy once you're in the VIP, unless you want to get into some automation, and we do have some Bloodhound stuff. Currently, Bloodhound is only for Ninja 7. I do know that it's coming out for Ninja 8, but they haven't told us when that's going to happen yet. So we do have some automation stuff that's not part of the trade room, so it doesn't come free with VIP. But anything else that's in the trade room that we trade on a regular basis, that I trade for my everyday trading, you guys get, VIPs get it for free. If you're not quite ready for that, certainly understand. You might want to go with just our pullback bundle of indicators. It comes with a month in the trade room, and that's only $17.70. Number one, actually, yeah, everything that's in number 2 is in number 1 also. Is that correct, Lisa? Am I right on that? Yeah, I actually had a video yesterday of it working live. That might take me a little bit to set up because I'd have to do it on Market Replay, Cyrus. So unfortunately, I'd probably have to, that might take me a little bit of time to set that up. Because I'm not working on my trading computer. This is not my trading computer. But we'd be happy to, tell you what, send us an email and we'll send you a video of it working live. You certainly can, Steve. You can use the Rockstar any way you want to. Now, I like to use, because I'm a somewhat conservative trader, I like to use support and resistance to help me in the event the trade wants to go against me. But there's no hard and set rule that everybody has to do that. I can certainly see a day, someday, where I may not have that qualification. I've been trading this particular trade setup for so long that I'm very comfortable with the 2, 3, 4 trades a day that I get, and I'm very happy with the level of consistency I've developed. So I'm not trying to get rich. I just want to be consistent and watch my account consistently grow. If you're maybe more interested in developing more trades, then you could certainly easily exclude the rule that I use, and that is to have support and resistance behind my trade. Yep, Mike, all you can eat. Yeah, there it is. There's the link of the order form down at the bottom. George, Lisa will not remember that. You have got to send us an email or, yeah, an email to the bunt at the Intentional Trader and request a video of the Rockstar. I actually had one, but when I on Thursday I had it was just one. You probably want to see it where it prints, right? Is that what it was? I can tell you it prints on the open of the bar that it prints on, but I know you want to see that, so that's fine. Yeah, email Lisa. Yeah, Alan, it's on. Yes, absolutely. So the Rockstar is set to the chart. It's on the chart. So every chart you put it on can have different settings. You can use the speed tick on a tick chart if you're so inclined, or get a better computer. Well, I don't have any problems with minute charts, and I run a bunch of them. So something's not right if you're having an issue. I'm not sure what to tell you about that, but I have no issue with it. You could discuss that with our tech guy. Maybe Praveen can help you with that. I have no idea. Now, here's something that, and it may not be the computer, Michael. I used to do all the tech stuff here, and then I taught Praveen, taught him how to do it, and as far as the support, and I had the opportunity to log on to a lot of people's computers and see how they operate their platforms and such. And one of the things that I noticed, thank you, Mike, welcome aboard. One of the things that I've noticed when I was doing that was how many workspaces people have open at a time and don't realize it. So if you have a lot of workspaces open, they are actually trying to work in the background. So your platform is still trying to feed those workspaces that you don't realize are open. I'm not saying that's the case. Who was that? Michael? But that's something to certainly look at. If you've got, I mean, and I was shocked. Sometimes I'd go on somebody's machine and they'd have dozens of workspaces open with dozens of charts in each workspace and whatever, open windows. And no wonder their machine was working so slowly. I'd go in and close all those workspaces and solve all kinds of problems. So, and that's a very common problem. Yeah, that's a very common problem. So, yeah, just check with Praveen and see if he has something to help enlighten you. Um, awesome. Welcome to the VIP, Mike. You're gonna like it. Did I miss any questions? If anybody's sitting there waiting for me to answer a question, if it scrolls off my screen, I'll uh, I'll miss it. But anyway, minute charts are, I prefer time-based charts. And although there's time at the bottom of a tick chart, which makes it a little bit easier, um, trading is all about time, and all of these other charts that don't include time, uh, I just can't get my brain around it, other than the fact that people like to have these nice, neat, clean charts that look really smooth, and they say they're removing noise, but to me, that's beautiful music when I can relate the what's going on in the market to time. I can't imagine doing it any other way. Uh, Steve, you'll have to send that to Lisa. That's that's outside of my pay grade. I have no idea. People have been asking us about this indicator and building this indicator for years. And when I developed the Super D, it was always the Super D had to be developed first. So it was always the intention to take the next step to the what we're now calling the rock star. Just took us a while to get there because I had a tough time with Ninja 7, but Ninja 8 is much more robust and gives us more ability. All right, any more questions? Now there's all kinds of videos. Uh-oh. We have all kinds of videos on YouTube. We have other webinars with much more detailed information on how to trade these setups. I didn't want to go into too much of that detail today, but if you want to watch, send us an email and we'll send you the links to those videos. Yeah, but get those orders in. We're just kind of holding off on releasing the Rockstar so that those that want to upgrade before we raise the price can do that. So we're giving you a little bit of time. Technically, it's ready to go, and we could release it anytime. The documentation is even written, which is rare for me because I usually, yeah, they can be automated. Well, this is only Ninja 8, Michael. We only are developing on Ninja 8, and Bloodhound isn't quite ready yet for Ninja 8, but talking to Jeremy, he says it's coming. He wouldn't tell me a day, but he said he's close. That's all I know. But yeah, in fact, some of the some of the settings that we put in Rockstar was on Lisa's request so that when Bloodhound is available, it's going to make it easier and better to use in Bloodhound. So the exclusion settings inside of our indicator is going to help with Bloodhound. Make it a lot easier to set it up and use in Bloodhound. So that was that actually held it up a couple of weeks so we could get that in there. Lisa is our Bloodhound expert here, and so she got that in there for you guys. Um, stand, stand by, Bob. You're jumping ahead, but just keep that happy thought. Yeah, we're on it. We got you. We're just doing a little at a time. Um, we have done. Excuse me. We've done, Steve, basically what you've seen in the room, in the trade. You're the same Steve H in the trade room, right? Yeah. So RSI, CCI, and the MACD are our favorites. I have noticed some of the others that look really good, but we're not using them yet. I'll leave that up to you and your study. Exactly. So instead of having to just look at the the Super D and then go and figure out which oscillators, which momentum oscillators generated the Super D, we're just putting it right there on the chart for you, so you'll know if there's a signal there, then your oscillators generated it. So it's going to make testing immensely easier for you. Yeah, a long while, because testing takes a long time the way I do it. Um, Now, that's the case because once I do it and I have the data for it, I know for sure that I have an edge equal to or better than the edge that I'm already trading, and I won't trade it otherwise. And I have to have a large data set to make sure of that. So it takes a long time, and I do it manually, not automatically, because it doesn't work. I mean, you can do it with market replay, but you have to run every single day. Any other questions? All right. Well, Lisa's going to limit this VIP because I think she's ready to get this Rockstar released to the masses. So we'll do a couple of more VIPs, and then the price is going to go up when we add the Rockstar to the VIP package and all the other packages. So anything that moves is going to get it, Mike. Anything that moves. Anything that you can put on a chart in NinjaTrader, and as long as it's moving and it's a good mover, and it doesn't matter really what time frame, although the faster the better. Haven't tried it yet, Bob. Why don't you try it and tell us? That's a good point. And I actually, what I want to do is, and it does not do it yet, but I didn't look in the market analyzer, but I looked in the columns for the trading dome, because you can add a column, an indicator column, and it does not work yet on that. But we'll we'll get that working on a next version. Yeah, yeah, that we're going to work on that, but we didn't want to release, we didn't want to hold up the release on that because most people aren't using that anyway. It depends on how you set them up, Alan. They'll stay on. Here's the thing about that, Alan. There's regular everyday indicators and then there's high performance indicators. High performance, what I call high performance, is that they read every single tick that comes into the chart. And they can only do that on moving charts, right? On charts that are receiving data coming in, whether it's live data or whether it's market replay data. The only way that they can update on every tick is data has to be coming in. Now, if you have static charts, and there's no data coming in, and you load all of our indicators, you will get indicators on some bars, and some bars that you would have had indicators on during live data coming in, you won't have them on the static chart. The reason for that is the way that NinjaTrader refreshes a chart. And this is for speed. When NinjaTrader refreshes a chart, it only reads the open, close, high, low of that bar. Those are the only 4 points of data that they take in. Even though at some point along there, we may have actually generated a condition that exists at a certain tick coming in. But it won't register because that tick didn't get measured. Okay, so on a static chart or on a refresh of a chart, all of our signals won't necessarily be there. This is why market replay is so important for making sure that when you're doing your studies, okay? Because you will get signals in market replay you will not get on refreshed charts. As many as your computer will allow, Mike. It's independent. Each one is on you can put one on each instrument. In the quick start, we're using, or the fast forward program, yeah, we're using market replay. We teach you how to use market replay. And we teach you how to troubleshoot. Yes, yes. And we teach you how to troubleshoot market replay because so many people don't use market replay because it's a pain in the butt. But there's an easy workaround for that, and it's usually something very simple. A lot of people quit using market replay because you get everything all set up and you hit the button to play, right? And you're sitting there and nothing happens. How many of you do that with market replay? Oh, everybody. Everybody. And it just pisses you off no end, doesn't it? What? I did everything right. I got the data and I've got the chart and I've got everything on here and I set the time and I know everything's right and I hit the button and nothing happens. How come? There's a few little things you got to check and then you're good to go. So once you know to check those things, piece of cake. So we have a troubleshooting section in our fast forward program. And I understand it's helped a lot of people get much better at using that. And again, I keep saying market replay because that's the Ninja 7 version of that utility. For some reason, I don't understand this at all. They now call it playback, but they're still calling the data market replay. So the utility is called playback. The data is called market replay. I don't know. They just made it really confusing. Exactly. All right. Well, let's call it a day. I've got some trees I've got to go cut up with a chainsaw that have fallen across the fence in my backyard. So I'm going to go out there sloshing around in this wet, mucky snow and see if I can cut these trees down. All right, send in some emails to Lisa and Connor, and they'll get you guys taken care of. They'll get you anything that you need to make sure that you're comfortable with this decision. If you want to talk to other traders, let us know. We've got lots of other traders happy to talk to you. Whatever you need to make sure this is what you're looking for, just let us know, and we'll be happy to help you any way we can. All right, everybody, have a great weekend, and we hope to see you all very soon. And again, welcome aboard, Mike.